It's a banker's trick, and inflation enriches the super rich. It drags the middle classes into higher marginal tax bands, so more of their income is being paid at the higher rate, and it crushes the poor who own virtually no assets. There's corruption all around you. It's accepted. You can let that take your blinkers away from you and your focus on the three rules and go, it's not fair, and you can sulk and rent a crowd and throw stones and BLM riot, or you can just get on with the fact that it'll take you maybe a bit longer, and maybe you won't become a centimillionaire, but you're going to get rich and you're going to survive this reset. But there's three things you really need to do, and I'll go through them for you.
Welcome to Discourse with Christian. I'm your host, Christian White, and today's guest is Francis Hunt. Francis is a trader, he's a technical analyst, and creator of the Hunt Volatility Funnel, known as the Market Sniper. He possesses over 30 years of experience navigating and teaching the trading and the financial markets, and he's here to share his thoughts on the current outlook right now. Francis, thanks so much for being on the show today.
Absolute pleasure. Thanks for inviting me, Christian.
Would love to start off asking you, what's your current take on the global economy and financial markets?
Yeah, I've almost got a pitch down to patter now because it's such a good quality question, because it's a foundational one. So the US has been the dominant superpower financially as well as militarily for so long. And the events of CV19 led to an end in the bull market for debt. So bond markets turn. Now, these are markets we're encouraged to know very little about. We're encouraged to think of as boring. And there's a reason, I think, for that, because debt is actually part and parcel with fiat, the foundation of our total economy. So the US almost could spend with impunity on the basis that, given its military might, its ability to grow and develop unicorns, they'll be good for it, and they could keep writing checks and building an overdraft. And it's my overall take, and I like to use simple analogies, not everyone's a technocrat and into economics or whatever the case may be, is that the US's unlimited overdraft, the bottomless coffee, if you want to call it that, when you keep going back with the big cup, has been pulled. In other words, it matters now how much they spend, a lot more than it did whilst the Bidenomics under Yellen were splurging for the final time. And actually, it pivoted post the CV19 events. We had the super high valuation of debt markets. They actually became ridiculously overvalued because everybody was in a state of fear. Of course, the stock market crashed. So whenever you have disinflationary moves, all the risk on assets crash and everybody runs into the counter trend asset, which is actually the safety trade. I say safety in inverted commas nowadays. That was bonds. That is US government bonds. And in other countries, it can also be their debt markets too. That has changed in short since then, and the inflation that followed, that was supposedly didn't exist, then was transitory, then was turned out pretty stubborn and hung about for quite a while, has highlighted this aspect. And the costs of now paying on that overdraft have now superseded even the contributions to the military industrial complex, which is one of the biggest. So you're sitting with an interest rate bill around 1.2 trillion a year. And actually, following the Biden Yellen, because I have to mention Yellen as the kind of chancellor, if you don't have chancellors over there, but head of the Treasury, she had the hand on the till. She actually reduced duration on a lot of the debt. So there's a 9 trillion landmine field of legacy debt that needs rolling over. In short, you don't have the money to pay for it, and you need to put it out in the market again. Only now the rates that will apply on that debt are significantly higher than when the original contracts that were entered into were in. So you need to think about this, Christian, as if you've been a little bit fly with your lifestyle, and you've been, driving Ferraris, renting an unbelievable home, living like a playboy, for want of a better phrase, and putting a lot of this on a credit card. And then you ran out of credit on that credit card, so you started another 2 or 3 credit cards, and you continued to fund your lifestyle on it, and then you rolled the first one a little bit and mixed it up amongst the other 3. And then those started to get kind of full, and this was all during a period of low interest rates, so you got 5 more. and you started spreading the 3 over the 5, which quickly, took you up to about 2/3 of your limits, and you spent the thirds on all the remaining 5, and the interest bills kept coming, and now interest rates have spiked. And what's happened is no more credit card companies are willing to give you a credit card. So now you're having to live within your means, and you've been living outlandishly. That is essentially where the US is. So I'm not going to say Trump isn't pro-peace. Generally, the impression is he's more accommodating to Russia and less antagonistic. That's already been established. But he needs peace in Ukraine. They spent 350 billion, or they handed it over. It didn't turn into investment. He's trying to claw back some resources. So there's this focus also on resources now for that money that has largely been lost. We've already heard from Zelensky that most of that money, or 50% of that money, doesn't even make him. So there's clearly been some, I would say, cacocracy in terms of corruption going on. And it was almost like the last hurrah, the party of the barbarians or the thieves. They've literally been stripping the gold chandeliers from the ceiling and the fancy finishings off the walls of a once beautiful grand hotel, America. And it's quite tragic, and it's going to end a 40-year amazing period. We're going to look back at it with fondness, believe you me, even though there were many booms and busts, of credit expansion, ever greater credit expansion. And it's also transgenerational. It benefited particularly the boomer generation. They didn't set it up per se, but it has certainly benefited them immensely. And now the hangover, we've partied hard, the party was great, but someone else has to live the detox the next day. And the debt and the overhang, that is all coming, and that is incredibly, incredibly toxic. And that's going to deal with a hypervalued stock market. You're going to continue to see buying power of your money collapse. There's going to be social economic events. The contagion and knock-on effects of this are going to transcend everything. It's going to be the story behind politics, geopolitics cross globe. It's going to be trade. It's going to be nationalism. It's going to be cost cutting. It's going to be tariff raising. It's going to be everyone for themselves, because initially we all worked together and went into this globalization stage that actually gave us a once-off major reset down on cost of labor. Because now you could have, under almost slave conditions, someone in China, Thailand, sewing your Nike football and your clothes items. And once that was locked in, we ran the inflation rates too low. So assets took all the inflation, all that excess liquidity that's created by low rates. And we got runaway booms in property, stock markets, you name it. And now we have the everything bubble that's kind of in a state of unwinding. So it's a very, very much end of cycle feel, is my opinion. And I should leave that as my opening statement and allow you to drill down.
Yeah, I was going to comment on a few things. I first kind of became awakened to the concepts of sound money and such not all too long ago, and have been following you and several others sharing their commentary. And it's so fascinating how, and I think about your average Joe, and I sound corny saying this, but like most people aren't even aware of the nature of our monetary system and such, and how it's led to so many things. It leads to things socially. For example, over here in the States, as I'm sure it is in many parts of the world, 1950, one person making a modicum amount able to provide for, raising kids, wife, get their tract home, fill in the blank. Today, dual income, I'm in my early 30s, and it's interesting how money then translates into the dating pool and other things, and so how it impacts everything in society. It's pretty fascinating to me.
100%. It's a social economics. Money is in everything. Money is power, the absolute power, unfortunately. I would say, and the problem we have is, we have a guy here on the UK side who seems to be viral and popping up everywhere, particularly in the European timeframe, but even American commentators are seeing him. And it's called Gary's Economics. And they've kind of got this working class guy that apparently traded for Citibank and made a few $1 million and claims to have been their best trader for a few years and no longer does. and he's campaigning for greater taxes on what he calls the rich. But he doesn't get specific on the rich, and he wants taxes on their assets, although he seems to conflate the difference between inflation and assets. And what people don't understand about the mathematics is, if you have 151 billionaires in the UK, which is roughly right, and the total assets are worth roughly 500 billion of those people, and I say that doesn't include the legacy families that are never measured and almost are the tax collectors and the runners of countries. So you're actually talking about a super rich below the very extreme trillionaire rich. You either believe, Elon is the richest guy, or Bill Gates, or you understand that there's transgenerational wealth that is being held very specially, but not in any one individual's name, for specific families. And they are held through the City of London, through BlackRock, through Vanguard. This is giant money that, and in many instances, by the way, people like Elon are often frontmen. When JP Morgan died, everyone thought it was his bank, and he had an absolute subsistence percentage. It was held by the legacy families. But anyway, so he's talking about taxing the rich that we recognize as rich. So from Elon down, to people that have 100 or 50 million, as if that will bring wealth. And in that mathematics that you do of, say, in the UK, because he's in Britain and he's suggesting this, he was talking about a 1% asset tax. Well, even if you made it 3%, you'd get about, out of 500 billion, you'd get 15 billion. And that would run the British government at their current over expenditure rate that they do for about 3 or 4 months. So you do this once-off tax, that once-off tax would have to happen 4 times a year, annually, every year, quarterly, on that basis. And that's a triple his suggested amount. So you don't tax your way back to wealth, but there's a big amount of people that are popping up that are putting forward these solutions that are getting a lot of attention and a lot of following and are preaching the hollowed out Gini curve, and it's wrong. We've got to redistribute. There's some truth mixed in. We have a very hollowed out Gini curve. For those wondering what a Gini curve is, it's the distribution of wealth. So the bottom 10% have 5% of the wealth. The next 10% have 8% of the wealth, and you get a curve like this. The final top 10% often have 25% of the wealth, for example. So you have that curve. What's actually happened is it got flatter and flatter for deeper and longer, and then you have this extreme wealth class. So you almost have like the two axes, a line that hugs the axes very tightly. And why has that happened? And what people like Gary's economics don't understand is that we've proliferated money and continually ran an inflation proliferation of money, which is debt and fiat. So that means the bond market continues to get bigger, new money gets borrowed into existence. So whenever you issue new money, if a government overspends, it's inflation. Every time they spend more than the income they're getting in. Now, the US currently spends around twice what it gets in. And its interest rate bill is going parabolic. And they've got 9 trillion to roll. That's going to be at a worse rate than what it was on originally. So you've got an absolute spend blow-off that is in Contagion. It can't be turned around, this oil tanker. It's hitting the lighthouse, unfortunately. But what you're seeing is the very late stages of Elon and Trump trying to do some clawback against profligate expenditure. But the whole principle of all of this is, when you devalue money, you make the billionaires who own assets richer. Because assets that have real physical use and utility will hold some value. Some will outperform inflation a little bit. So you would say, for example, gold in the last year and a half has outperformed inflation quite substantially. Over an entire cycle, it typically matches and slightly beats inflation. You've also got to bear in mind the inflation statistics you're being told are not actually the correct statistics. They're for a specific formula where the package is being adjusted all the time. So there's all forms of sleight of hand. It's a banker's trick. And inflation enriches the super rich. It drags the middle classes into higher marginal tax bands. So more of their income is being paid at the higher rate. And it crushes the poor who own virtually no assets, but find that their money buys less of the things they absolutely need: food, rent, etc. So it's destructive to almost everybody except the exceedingly rich. And the Fed has nodded its head every time people have raised questions about the income distribution, the inequality of income distribution. And it's, oh, yes, it's terrible. And that every part of their policy is intrinsic to ensuring that via virtue of inflation. So central bank policy is inflationary. The governments are encouraged to spend more than what they make, and that which they spend more goes on to debt, and that debt issued sees more currency being borrowed into existence to be given to the government to do that overspend. So you are diluting your piece all the time. So it's like the pizza's this big, and what's actually happening, the buying power, as I expand the pizza base, but I'm using the same amount of filling, everyone's getting a much bigger slice with much less real pizza on it. The cheese is the same when it was this size. The bacon is, it's all getting chopped up. So you're getting the ever less diluted currency. And that you feel it in the buying power. When you see those charts of gold going down 97%, your buying power of the metal relative to the metal is being destroyed. And that is the income inequality. It's not, hey, our government should tax more, but this is this narrative they want you to conclude. And that's why you're getting all of these speech leaders that are coming out, well, actually, we should tax the rich more. So you have a bit of Bernie Sanders over in the States until he's become a millionaire now. We never know how all these career politicians become millionaires that weren't millionaires originally. Again, I refer you to cacocracy, corruption, insider dealing, and a lot of other things over a career spanning absolute decades. And of course, the funders of the politicians, APAC, ADL, those kind of places, and others, particular lobby groups. So you've got to have a look into that. But the inflation is the income inequality distribution problem, 100%. Because if I own lots of properties all over the world and I'm a billionaire, those properties have all gone up immensely. If I own a lot of gold, which smart people do and are informed to do, it's all gone up immensely. If I own equities in mining stocks, they're going to go up soon. And if I had owned equities in technology stocks, they have and probably may still for a while. We don't know quite what's going to happen when that party ends, but they're not going to go away even if they sell off badly. They've done incredibly well. So the people that own assets and shares, 90% of the stock market is owned by the super rich. Actually, the participation of the average Joe barely makes up 10%. So this is the thing. The billionaires have got super rich and everyone else is impoverished by it. And it's not by tax that you fix that. You stop inflating and destroying the value of money so that you stop killing the guy who could afford X number of loaves of bread in a month and X number of pints of milk. And that's where we're at right now. And that's the misconception. And they're going to jump on the taxation to validate and justify a hollowing out of the middle classes because the rich don't pay high percentages of wealth in taxes at all. They don't draw income in the same way. They're not employees. They don't have a pay as you earn table that they're being measured against. They don't pay the top marginal tax rate. In fact, most of what they use might be government assets. They might own nothing, just a lot of shares in the company and stay in company houses and fly in company jets. So this is the big concern for me. We're going to lurch towards communism on a false narrative brought to you by the central banker, commercial banker, and government troika that have set about overexpending, overproliferating, and destroying sound money principles. That's the big case. That's what everyone needs to understand. If I could sign, seal, and put that in a little parcel into everybody's brain, that's what I'd love for them to understand.
You covered so many great points, and I'm just enamored by by what you're talking about. Wanted to comment on as it relates to kind of the inflation and what I see like on the ground and stuff. I've been providing housing for since like COVID time, like rooms and such. And one of the things I've noticed is a lot of people 25, 30 plus years older than me who are not in the best spot. and reaching out, and where there's little to no in reserves and such. And it's pretty alarming to me as someone who's young and starting in their careers and such. Just so that's what I'm seeing, like kind of boots on the ground, just to add to what you're getting at.
It's a very sad anecdote and a very scary one. And we hear it a lot over here. And I visit the States a lot. By the way, love the American people. We're very well supported by them. I come from a country that's similar, sought liberty away from the European nations. Like-minded, outdoorsy, great stuff. But the people that have led America have parasitically set about the controlled demolition of a great nation. And there's a lot of people that can't see beyond. If they had a $500 outlier cost, that would battle to actually meet those. We hear stories like if they had £1,500. Did you know one of the biggest bankruptcies is medical? I'm told. I've seen the stats a couple of times. If you have an event happen where you break a leg badly, you fall off a motorcycle, or a car hits you crossing the road or something like that. I mean, it literally can be a bankruptcy event for the individual on account of medical bills, one of the most common. And it's an absolute tragedy. And they're part of this low end, hugging the low end percentage of wealth. First 10%, second 20%, 30, 40, and the plane's barely taking off. That's the Gini curve. And then suddenly it gets here, and then it turns into a rocket, where a more normalized distribution would be a straight line. That would be quite consistent, steady growth. You normally have a bit of warp in it, because as you go up, you have maybe more talented people in terms of business and sound money, but not necessarily better human beings. And they've been better at the money game. And my one of the last videos I just did is, here's 3 key secrets that you need to do. And I'd love to give this to you and all your viewers to be wealthy and win in the game. And if you don't understand you're in a game, and gamify this, I like it, because I think of myself as young. Unfortunately, I'm not as young as you, but we love games. I went to arcades. I threw small fortunes in what we used to call the equivalent of dimes and quarters in the States into playing the early games of asteroids and Space Invaders. Give my age away there, and pinball even before that. Gamify this, have fun, engage your competitive spirit. But there's 3 things you really need to do, and I'll go through them for you, and none of them are earth-shattering, and you probably heard them all before. But when you combine these 3 together, you will start winning. But remember, they're easy to explain, and you've heard them before. They're not easy always to do. So number 1 is live within your means. That means you spend less in total on all things than what you're currently earning. That immediately gives you a positive cash flow. It doesn't have to be a lot. But that means credit card, buy now, pay later, that's off. That's out. Like all days. If you can't buy it outright, you don't buy it. You've got to cut back really hard and be quite stoic on yourself. This is Sparta, sleep on rocks and wear one robe and wash it every day. That is the concept of, that's how it feels. It's like you're being put on a financial diet, and everybody is toxified financially, actually, with debt. Debt is the virus, and you're toxified with it. You need a detox. And what do? You've got to stop spending more than what you get in. So point number 1, produce more than you consume. I can say this many ways. So start thinking of a side hustle if you're not earning quite what you think you could and the career is moving slow. Anything else, boost your top line rather than it all coming in cuts, because you could become miserable, depressed, etc. If you can't stick to it, it ain't going to work. So it's more about even a small win that you are consistent with over time. You see, the most powerful thing is compounding, Christian. You've got to do something consistently that's mildly in your favor many times over on a long duration. You don't have one blockbuster workout and be a jack dude, as you and I probably found out. It's about how many times you show up, and that's when you show up on the bad days and you have a lighter workout, you don't do as well, you maybe don't push as heavy or as many reps or whatever the case may do, but you maintain the routine, those are actually the biggest winner days. And in fact, blockbuster workouts are actually bad because the next day you're hyper-wrecked, you've overtrained, etc. In the same way with finances, just win tiny. Start with micro, because everybody tries to be a millionaire. You don't do it in one swoop. Just stop being someone who's living outside of your means first. Small victories, set low bars. They're all quite a bit tougher to attain, actually, than you realize. And then try, once you're positive, try open it up a bit, get that upline higher, and without pushing up your bottom line, and find other cost efficiencies. So that's point number one. Point number two for building your absolute wealth. And again, as I say, these are well understood, but they need to be reinforced and brought forward. If you're suffering, if you're one of those guys that you were helping with housing, and by the way, credit to you for being that guy, helping people in that space. You've got a good heart. They failed on these three things. That doesn't mean they're bad humans, by the way, or stupid humans, but they have failed, and it's never too late to start. You know, Colonel Sanders, how old was he in Kentucky Fried Chicken? Choose your analogy of choice. So point number two is, with that positive cash flow, no matter how small, it can be a $5 cash flow every month that you make or every week. Invest it in assets, physical assets that retain value in a currency debasement period. And for those of you that are wondering, well, that's quite a word sandwich, Francis. I'll just simply say, go with gold right now or silver, because this is the stage we're in, and that's the outperformer for you. So you put that $5. We even have a bullion vault link in our YouTube. People anywhere can slowly accumulate internet gold until they get to a big enough amount that a gold dealer will take your order. You know, invest $5 a month, $10, $20, $30, $50, $100, and then get up to a couple of thousand. Sell the internet gold, because you'll get the uptick with the movement through bullion vault, and buy it physically, and then go and vault it and get patient and sit with it. So point number two is what you do with that positive cash flow. You can consume and get the latest iPhone, and you get a one hit of endorphin and showing your mates that you're current and whatever the case, flashiest car, etc., etc. Not a reserve asset. Not a reserve asset. If it's not a tool for production that's developing income, it's not even a worthwhile expenditure. Carry on with your battered phone, with the broken glass. Get it repaired. Do, hustle. And then point number three is actually pay less tax. And there's 100% legal ways to pay less tax. In short, you need to be smart. You need to set up businesses. You need to set up structures. If you're an employee paying pay as you earn, you have almost nowhere to hide initially. So think about entrepreneurship or consulting. Eventually, you might, if you're worthwhile enough, you can have a contract business that consults to your company doing similar tasks that you're doing right now. But you need structure around you. Here's the cost of taxation. And thankfully, the US is not the worst place for personal income tax, but I'll just go over this. If you double a dollar, Christian, 20 times in a year, so 1 year, you double it. Then the next year, so it goes from $1 to $2. I start year 2 with 2, I make it 4 at the end of the year. I start year 3 with 4, I make it 8. After 20 years, on that rate of return, you have over $1 million. Do the maths, it's fun, but this is the power of duration and compounding. It's obviously quite a decent return, and some might say, well, it's harder to double 100,000 than it is to double a dollar. But start with the doubling the dollar. Worry about the rate of growth later. If you pay 30% tax at the end of every dollar year, you have a dollar, you make $2, but you got to pay 30% on the dollar profit. So you only get 70% cents of that dollar. You start the next year with $1.70, and you double that. That becomes $3.40, but the 170 is the profit, and now you've got to take another 30% of that. If you do that sum over 20 years, do you have an idea what amount you might have? Have a guess.
Gosh,
Anyone, wild number, throw anything out.
Uh, Gosh, it'd be, I mean, obviously over over six figures, of course.
No, not
No,
over six figures,
no. Okay.
$24,000.
Okay.
That's and everybody does that. By the way, you're not silly in any way. Everybody thinks over six figures. That is the cost of having someone take away your cash flow from you and reduce. Now, admittedly, it was 100% return, which is quite high, but it started from an incredibly low number, as you'll probably agree, $1. Everyone can get $1. And you could probably find a way to double it at least for the first 4 or 5 years and retain it. That's what happens near the end. You've developed skills, you're doing great. But if you're allowing someone to take the large part of it, any tax that can be deferred, any structure that can cover some costs, that reduces your effective tax rate lower. Look, there's a morality and contribution in a country. I'm not going to tell people to avoid all tax, but I can certainly say the way I feel about how governments have conducted themselves, I don't see them as good hosts and good distributors and good custodians of money. So you owe it to yourself to show loyalty to yourself, your family, your friends, and by that be the most self-actualized you can be, because your government are the people that brought the CV19 events and everything that went with it, the crashes that are cooperated with the central banking cartel, the commercial banks in devaluing you. They are already taxing you in inflation. Inflation is the great tax, and it is eating at you, and they've put you on the wrong side of a compound interest equation on inflation, and by doing so they are taxing you every day by diluting the value of that dollar you hold in your wallet. Every day they spend more than they have right to, and they issue more debt. They've diluted that cash in your wallet and those digits in the bank, which you don't actually own, by the way, but let's just leave that point for now. So here's some things to think. So let's just re-go over it. Develop a positive cash flow by producing more than you consume, living within your means. Point number 2 was invest that positive cash flow. Don't consume it. Invest in something that is designed to retain value in a currency displacement inflationary environment. That's exactly where we are right now, and that would be gold and silver for me, and in time gold miners. But it's still a derivative, a mining share. You're still relying on managers and profits, etc. But I think they will do very well. Point number 3, pay less tax. Structure your affairs. In some instances, if you left your country and became a global tourist, you get treated better because you are born in America, and then some people watching this might be born in the UK or other English languages. Your slave master totally owns you. When you leave and you are a foreigner and he doesn't have the full power, he does better deals for you. So the American that goes to Georgia, and for example, a small country, will be delighted to have you. They have a lower income there, and they'll make it very sweet for you to settle there and to be tax resident there, as an example. So things to think about. Many of you will say, well, I don't want to move to Georgia. I've got kids at school. I've got a wife. I've got this. I've got that. That's what they're relying on. That's the inertia. And that's also what sees you not follow the 3 rules. You need patience and discipline. The 3 rules are real simple. I'm pretty sure you got them. They're not hard to understand. Most people that you're seeing that are in that fairly desperate situation that you described so beautifully and are tragic. I mean, I felt it in my throat, and I know it's all around us. It's because they didn't get to do any of these things. If those guys had put a small amount of their wages every month into gold or even the stock market properly, that they weren't allowed to touch, that they just snowballed and built, they wouldn't be in that situation. If they were ensuring that they didn't pay unnecessarily to a government that's behaved very badly and is taxing them anyway in inflation, they probably would have been. But they probably had normal jobs, paid hourly rates, and they probably never even saw the tax that was taken at source before they even had a word to say about it. That's how they've lived. In other words, they've failed on 1, 2, and 3. And when I say it's a deficiency in them, I don't mean they're stupid or anything. It's a lack of understanding that there's a game on here, And you have to look after yourself, and you have to recognize the game, and you've got to have the patience and the discipline to implement what's actually three pretty simple rules. And I've failed repeatedly, and you have so many chances of getting this wrong that any amount of time and duration has worked. You know, I've had credit events. I don't have any debt anymore. Now I have 7-digit sum in precious metals. I'm fortunate to have properties 100% unencumbered. These are the benefits of somebody who starts applying those rules without being exceptional in anything, and having been, you know, basically on my knees after the subprime in a financial situation. So you can turn your life around in a decade easily, but don't be tempted by the fast fix. Those are just new traps that give you dopamine and take you into the sewer again. So even though we do trading, we do very little aggressively, and it's all long term, and it's not with excessive leverage, and it's after you've learned. You've got to earn that right to a little bit of leverage. You've got to show that you can invest, stick to it, and watch it grow super slowly. It's going to look like a snail. But every day and every hour that goes past, you're that tiny bit better off, because your little bit of extra cash flow is going to be coming in. You're living within your means, and you've got micro habits that are compounding over time in your favor. And when you combine all three of them with patience and discipline and duration, you're going to win. It's inevitable. And you can look at people in the cacocracy. Some were pointing out, again, it's a bit of a UK example, but there's plenty of US versions. Rishi Sunak, the recent Conservative Prime Minister, his family had 600 million, pharmaceutical company, and he was getting a lot of wealth out of, the lockdown events, etc., out of that. And some people could look at, Nancy Pelosi, for example, and her connections, and how she's such an awesome stock picker and all of these kind of things. There's corruption all around you. It's accepted. You can let that take your blinkers away from you and your focus on the three rules and go, it's not fair, and you can sulk and rent a crowd and throw stones and BLM riot. Or you can just get on with the fact that it'll take you maybe a bit longer, and maybe you won't become a centimillionaire, but you're going to get rich, and you're going to survive this reset, and you're going to be positioned well for it. And it is coming, and everyone should start. And that's the message. A second message. So I'm taking another little parcel, and I'm slipping it in your viewer's brain. So I've explained to you that inflation is policy, and it's taxation, and it's the reason behind income inequality, because you don't own assets. And now I'm putting another little 3-bullet wisdom that I think is a wisdom that if you apply, you're destined. Forget about luck, because there's a lot of people saying this Gary's economics is you'll never get there. He's a doomer. You'll never get there. It's too late. The economy is going to crash. It is. You'll never get there. Absolutely, you can. There's something useful you can do. You have an internet connection. You have a personality. You have skills in some place, and you don't even have to be the best. You just need to start. You just need to get started and get that side hustle going, get that work going, align it with something you're passionate about. And unfortunately, nobody can stop that. I say fortunately, personally, but the darkest of forces are disempowered by that. And you will win in the end. And that's what everybody needs to hear and implement.
And as it relates to gold and silver and such, how much of a person's net worth and so on and so forth that you feel should be allocated to that?
Yeah. So you'll get registered financial advisors, IFAs, and they'll probably say not very much because they don't earn much commission on selling gold and silver. In fact, you can do it all for yourself and buy it from a dealer, and they get nothing. So inherently, the traditional advice that people will get is going to be very different to what I'm going to say. What I'm going to say is what I do. It's not what I'm projecting for you. Each person is different and has different income. I am so confident in the state of cycle that we are in that I am what a normal IFA would describe as overweight in terms of gold and silver positioning. And that's by intent. And by the way, I've been that way for the last decade and a half. And I think we got about a 55% move last year. Since since just the year ended, and we're already up again this year. So I'm getting positive enforcement for what I believe is a positively taken view in terms of where we are going. So I am overweight in that. I would not say to everybody, go accumulate NVIDIA per se, just in terms of valuations. It's priced perfection, and it's discounted, 100 years into the future in terms of earnings. There's going to be a lot more drama that could come your way there. The problem with money, and here's a third little parcel I'm going to put. So there's 3 parking garages here in the brain. The most important time for your wealth is when everything is going wrong, because actually that's when you need it. So there's the saying that bankers are always offering you brollies, and it's only when it rains they want them back. When it starts to rain, they all ask for them back. It's like a loan. When you don't need credit, they're offering you loans all the time. And then when the hard times hit and you need help, they're like, oh, no, we can't underwrite. So there's that essence to that. You need your money most, and you'll be a forced seller. You'll battle to make a rent check, or your job has been lost, or you've had a cutback, something happened. It's generally likely that that's an overall market condition that has brought it about. You saw that in CV19. I've used this as an example a lot of times. People had their businesses shut entirely. Yes, some got some stimulus payments, or furlough payments, as they call them in the UK, but the truth is you had to wait a while before that happened, and then everyone was scrambling for money. And guess what? It wasn't a good time. What held value? Bitcoin plummeted. The stock market plummeted. Gold did not dip by much, and then went on to make a new high shortly thereafter. So you need something that actually has a very low downside beta for the times we are in now. And again, that's gold. Again, that's gold. Because when you most need your money, you don't need its valuation to halve on you, or to lose 80% on you, which crypto has often done. So there's that. So when you ask about allocation of metal, the low downside beta is volatility. How volatile? How much do you swing around the place? A fairly stable asset like gold that is trending strongly up, actually, but not with huge volatility. It's gone to 3,000, but it didn't dip down to, it didn't go 3,000, then dip down to 1.8, and then smash up to 3,200, and then dip down to 2.7. And, it's far more stable. And if you need in a difficult time, the bankers, the central bankers that have brought the situation, are stacking gold, do what they do, not what they say. The governments are wanting their gold back. We've heard of the huge movements coming to the US out of the Switzerland and the UK of bullion. And the commercial banks and high net worth, the billionaires and centimillionaires, are buying the 1 kilogram bars. There's actually a shortage in some of my bullion dealers' info. So buy something that won't lose the bulk of its value when you need it most. It's not what it's doing on the sunny days that matters. Is the brolly available when it's absolutely raining cats and dogs? And will it still function, and is all of it still there? Some things, 80% of it's gone, and you're just left holding the handle. It's no good in the rainstorm. You're getting washed. So take that one as another little bullet point for everyone to hold on to. That's where gold serves you.
I see. And then wanted to let's see here. I had another question here as a kind of frame the current landscape and such. We've obviously seen major shifts, monetarily speaking, over the last few years. Where do you think? Okay, obviously you mentioned about where we are in the larger cycle here. Here we'll pivot to geopolitics here. What current geopolitical tensions, Ukraine, Taiwan, or the Middle East, are most concerning to you as it relates to like market volatility, things of that nature?
I think Trump,
even though,
yeah, no, I've got an opinion for you, and I'm happy to talk about it. I think Trump is the president for the attack on Iran. I think Netanyahu has always wanted Iran attacked. Everything that happens is always, but funded by Iran. If it's the Houthis in Yemen, it's, but no, Iran's behind it. They gave them the weapons. Or this is what I call the vilification process that then will make it acceptable to do the nation flattening process that follows. And the most vilified nation, for actually very little provable reason. There'll be some people who will disagree with me in the comments, I'm sure, but from my analysis, very little provable reason. They don't have a central bank, and it's the goal that they should have one. They're also in the greater Israel area of the Middle East. That, I think, is an establishment of a larger geostate. And Bibi likes that American bodies go into the mincing machine rather than his own. So I think that's my concern. I think an attack on Iran, and many narratives will be seeded that will lead to that. And you saw how I have a theory. He's been talking, Trump and Putin have been talking. Well, Trump stood down entirely, did you notice, on Syria. He was almost he was an ally with Syria in essence, and they were allowed to just rip through there. Orthodox Christians are being slaughtered now by this ISIS force, which many believe to be Mossad-backed. They never attack Israel. They're always in the Arab states, causing a lot of issues. So I'm not overly fond of the Zionist agenda that I see being pushed forward. But anyway, the conversations, I think they've already, Putin's going to get most of what he wants in terms of the Ukraine peace deal. I don't even think they're talking about that. My fear is Putin is going to stand down militarily when Israel bombs and American soldiers go into Iran. And you're going to have a close to a Syria situation. I think there's more fight in Iran than there turned out in Syria. And there'll be more pushback, but that's, I fear, the next war. If you're asking about geopolitically, where do I see that next breakout? In terms of how things can go, there could be a lot of contagion in there. You could find China provides a lot of behind-the-scenes support to Iran just to engage America and have them, run their resources down. And as I've said, the credit card is gone for the US. That's why they need the peace deal. And Trump is rightfully saying the EU has been skiving off America, because wherever I look at stats, it's either 61 to 70% of NATO is funded by America. And America is quite a far away from, I suppose, if we are to assume Russia as the big bad guy, which I don't. So there's going to be an arming up of Europe, and they're going to get even more indebted. And this is going to be their CV19 event, because it was America that did 6 or 7 trillion and then actually bailed banks to the tune of 20 trillion. Many people don't know that. It was another banker bailout. They chose not to focus on that. Loans were given to even European banks, not just Citibank, Bank of America, but Credit Suisse and everything. So there was a huge proliferation in CV19, and that's the end of the debt cycle. The 40-year bull market in bonds is over. They go down in value, and rates generally stay stubbornly high. So we're in a stagflationary, and I think it's going to go hyper stagflationary, which basically means instead of, you're going to have stubbornly very high inflation, but not hyperinflation, and you're going to have terrible economic growth, often negative as well. So you're going to be beaten on both ends. You've got to remember, this is the night to the Goldilocks Greenspan liquidity. There's no inflation. We can't create inflation. We drop rates so low. We keep printing, letting the government overspend. We pump bubbles in the stock market, the property markets. Hey, there's no downside. Your bread still costs the same, all of this, your clothing, etc. That was the once-off globalization effect. And now we're reversing that. So, US workers, you can't put them in slave conditions. You've got to give them a lunch break. You've got to give them a pension contribution. You've got to do a lot more things. And you want to bring that manufacturing back. You need to kill the dollar a bit more. And you need to put tariffs on everybody else, because I think when we had a pre-chat, you were going to ask about tariffs. So let me preempt that a little bit. You put tariffs on everybody else's products to make it more expensive. That's another income for the government. And they counter tariff you, as China is doing on energy from America, because gas and oil is something that's being exported there. So that pushes up the Walmart prices. This is inflation. That's where you get your stubborn inflation, because China uses a certain percentage, say, of US gas and oil. Okay, add 25%. Your inputs for making everything go up. So China charges more. because they want to make the same profit, at the least normal profits. The good goes into America. Trump puts a tariff on that because it's coming from China. You've now had two governments include a tax on the American population because Walmart is the primary feeder, for example, one of the major chains where you buy your core goods. So actually, tariffs from Trump, and he started this, and counter tariffs by those that respond, like China, as I've described, are pushing up inflation for American citizens and are a tax that both governments get to take off you. And inflation inherently itself, as I already explained in the second box I put in your brain, is a tax too. So you're getting double taxed. And the rate of that inflation is going to go up higher. So the poor are going to get squeezed, and we're going to have when you have riots, I don't know if you recall the Arab Spring, when you hit the breadline level that people don't eat, that's when it gets ugly. That's the tipping point. When you start to have a lot of Americans that are really struggling and homeless, and you get a fertile pit for anger, you're going to get the Marxism being pitched. Too many rich people, too many extreme poor, and they will play this Gini curve story, and I've explained it already. But that's what's coming. You're going to get the social unrest. They're going to weaponize the immigrants. They're going to weaponize BLM. They'll weaponize poor whites in flyover states that are struggling. They'll weaponize, all the racial genders, all the substructures of divisiveness that can be brought to bear will be weaponized in an anti-rich brigade. And the real rich that should be punished should be the politicians that all became centimillionaires on insider trading, corruption, handouts, and selling the country down, waving through bills that encourage over expenditure that destroyed the sound money principles. And I'm afraid that there's going to be too few people like me making that's where it is. And Ron Paul was the greatest president America never had. And anybody who wants, his Americanized take should listen to him. He's still around. He has a show, and he understands the principles of sound money. And he's been a voice, a rare voice, against the central banker cartel and their inflation as taxation principles. And tariffs will add to that inflation, to answer the question you didn't yet have a chance to ask, but we spoke about before.
And as it relates to Ron Paul, yeah, he covers some very interesting points, and I think we're so lucky to live in the time that we live in, even though it seems, as a history buff myself, how things are so cyclical. It just human nature, right? Like we have the same, mind and body as someone from 2000 plus years ago, and the same emotions and all that. And as I continue to, evolve my views on things, I look at people who are running the show as it's just a micro. It's a where I live, but on a grander scale, and the manipulation and things that have gone on. And you covered another thing I wanted to comment on. It's just fascinating how the world works. And I'm a far cry from fully grasping everything, obviously, but it's just mind blowing. And there's another question I was going to ask you too, but I'm trying to think of it offhand.
Yeah, well, take some time, but it is fascinating how the machinery, and that's why I focus on the core, basic, simple principles of combating, because you're born on the wrong side of the seesaw. It's on the downside, unless you're a politician's child who's insider, unless you're in the banking system as a trader for a megacorp bank where they privatize their winnings and socialize their losses. The spikes in inflation caused by QE1, 2, 3, 4, those were which was twist, were all bailouts of banks, and the consumer didn't recover. That's why it was such a long story. It was a depression, basically. They never call a depression as it happens. It's normally well in retrospect that they do. And that was definitely a depression. Some people will even consider the events of the dot-com boom being pretty extreme in terms of recessions. That deserved to be at least a great recession. But the CV19 was the switching off of the global economy. So they've had to go ever greater dramas to actually then validate an ever greater splurge. And these were your inflation surges and your currency destruction surges. No investors want to buy bonds anymore to the same degree that they used to, because they pay a rate that's well below a true inflation rate. The BLS lies inherently. They say lies, damn lies, and statistics. BLS falls into the statistics. You look at shadow stats, what the real inflation rate is, it's a lot higher. So they understate that. And that's, that is, again, as I keep saying, it's a tax. It's taken away from you. So you've got to understand the rules of the game so that you can play this game and play it to win, because it's all stacked against you. You start with a compound interest equation against you. You start with a student loan. When you're a kid, nothing much is going on. They're putting you through programming at school and even at university to be a good salaried employee that pays his taxes to the full and does what his IFA says and has a company pension that buys bonds so that the government can keep overspending. And the only way you retail out of control spending governments is you cut their ability to spend. How do you do that? Well, we used to have a gold standard and that restrained them immensely. That's one reason why we'll never get back there, because nobody as a government ever wants that restriction on their ability to buy votes by spending pet boondoggle projects, etc. And that's the corruption that makes the politicians rich as well, because they get kickbacks, they get fedbacks, their lobby groups get money and they send it back to, and there's a nasty little loop of cacocracy that feeds the political classes. So, I mean, you can have big oil that will have lobbyists, and the lobbyists will pay, gifts and things and tips and what to buy, when to buy to politicians. There's lots of dirty deeds done dirt cheap. And then they get rich and then they vote for, that lobby to get what they should get, etc., etc. And BlackRock is literally legacy family money. They're picking up all the contracts for rebuilding Ukraine. That's after some peace deal is done. They'll be picking up contracts in Syria, I've no doubt, Gaza and Palestine. They're going to be helping pave that place over and turn it into whatever resort they want to turn it into. These are mega corporations. There's a corporate fascism where you actually, I would say Larry Fink is a more powerful person in the triangle of control and power than Trump is. Trump is just like a front man that has to go make sound bites and be a personality and go practice at The Apprentice first before you get to have your live version. The guy's running and accumulating the money, sitting on 9.5 trillion one asset manager, and is being given the contracts. When Argentina had to renegotiate their debt deal with America, BlackRock was sent there. That's not a government. That's not looking after the people. That's a corporation with private interests, just like the Federal Reserve. Fancy that. So it's a captured game. Be cynical. It's okay. But learn how to function within that and be focused on the three things I gave you and keep compounding those with patience and diligence, and you'll win.
I wanted to mention, and I don't know if you have any commentary on this, kind of indirectly related to our conversation. I just think it's interesting how like you and I have been, obviously born in the 20th century, and how you think of most of the world, we've only been exposed to the world that we have and thinking this has been the norm. And I think about from a macro level, like just human history, Western civilization, just in general, how it's so atypical how things are run, and a lot of this dovetails in. But what I'm getting at is just how, you mentioned about whether it's a fiat currency or whether it's the power structure where you're seeing the rise of influencers or this consumption society, and not that we haven't had that throughout history, but I just it's just so interesting. Entertainers, the sports, of course, has been around, and it was, but it just seems like it's just a different world on a macro level. I know I'm kind of going off.
Well, you're making a good point, and one of the things I would say on that is that it's bread and circuses of the Roman days. You know, you've got so many distractions. Who's your basketball team? Who's your baseball team? Who's your American gridiron team? You know, there's so many sports you can go and watch and go team. You know, red versus blue, etc., etc. There's so many opportunities for you to sit down with other people, drink beer in a couch, and watch sport. And I restrict myself. I still have an indulgence for one or two, but I restrict myself quite intensely on that. And I treat it as an indulgence. It's almost like sitting down in the fat chair and eating cookies. You've got to know that there's not that it's pure. It's a break for the brain. And those things that I mentioned in terms of the three secrets, never let those things like sport step in the way of that. Entertainment, Netflix, all of us. And there's quite a bit of malicious programming that comes through both the sport, I would say, but definitely in the Netflix films and structure. There's conditioning. These guys never stop. Their system is relentless at every level in terms of keeping you where you're at. You know, so your whole goal is breakout and freedom and winning and recognizing that there's even a game. If you just go, you're going wherever you think the weather, you're playing it, you're easy going, you're easy going, you're going with the flow. You're going with somebody else's flow. You're watching Netflix where, you know, Julius Caesar was a colored person or whatever the case may be. You're having your history repainted for you. You're having, you know, they did a BLM, everyone had to kneel in the UK before sports and games. You're getting all sorts of socio-political memes rammed down your throat. Whenever you go through the main programming centers, and they call programming for a reason, you're going to get programmed too. You're not just going to get to watch a game. You're going to get told stories subliminally, and some of them even quite overtly. And, you know, I don't think you should be giving your eyes and ears to malicious forces that actually are behind most of the wars and behind all the inflation and the devaluation and behind the hardship of those probably good, honest people that never understood that there was a game that you're helping in housing. But that's there. So be very careful who you give your attention to, because diversion is a key tactic, and they want to divert you. They've now heard that Francis gave them the 3 rules, and they're going to make you earn it. How diligent, how consistent, how many times do you show up for that patience, that stacking, that feels so slow, that, oh, wouldn't it just be nice if we could strap a jet engine on this and just pump to the bit where we get to be a millionaire? You know, fast money goes fast. Ask someone who's, you know, who traded crypto stocks with 50x leverage. Fast in, fast out. They would have been a millionaire and back again in 5 minutes with the right leverage and the right crypto. The slow dough accumulates slow, but it stays there. It doesn't disappear overnight. So slow dough is your friend. Fast dough, if you happen to be lucky enough to get it, bank it quick before it's fast out, because you're probably overplaying with leverage or you're playing in a very high risk area. And even the gains that have been made out of the Mag 7, there's a lot of puff in there. And as the debt roans back, we're seeing housing markets. So a couple of US stats for people to consider in the States. Washington, double the amount of houses are up for sale. That's job cuts. 22% lower prices. Certain areas of Florida, amazing gluts of property. Employment starting to be concerned. Consumer is concerned. Record high bankruptcies, record high arrears on credit card and auto loans, all hitting new records. That is not a pumpermental economy. They desperately need to have this disinflation event where we have a market crash, essentially, so that they could try justify another quantitative easing. But the difference is they won't get to borrow into existence the same amount of money, because gold will just go absolutely ballistic. The problem is gold is the canary in the gold mine, and it's already tweeting like mad. So, you know, so don't light that match, because the whole place will blow.
2 other questions. I want to be respectful of your time. Is there anything in particular that doesn't get the attention it deserves that etc.
I would say, first of all, I've already given you the 3 parking garage in your brain, the little chip memory wisdoms. Those all 3 are golden, but that doesn't make them easy to do. Other things that don't, debt, the dollar is a debt instrument. It's borrowed into existence. So for every USD, there's a UST of $1. You need to think of it like that. It's a T-bill accounting. When the debt market collapses, it's a forecursor. It's one side of a seesaw. So when rates go up, the debt valuation is down. Most people don't understand how bond markets work. So you take a battering on the debt market, then you typically take a battering on the currency. Then you take a second stage battering on the debt market, and you get a second stage battering on the currency. We are left, right, stepping our way down for currency devaluation, and that's inflation. And there's going to be huge cuts required in government because people won't buy the US debt anymore. So it's ended the cycle where you can just keep issuing. The percentages are too high. No one wants to buy it as an asset class. So unfortunately, once you have to live a lot tighter than you've used to before, there's knock-on effects. In the same way as you get magnifier effects when you go up, you get inverse magnifier effects when you contract. So you cut some people's jobs because you have to contract, but then that means they sell their houses for less, and then there's a knock-on effect. The estate agent has to get cut, but one of them, because there's not enough sales going on and the prices are falling and there's no buyers, So the knock-on effect, you get actual contagion, and people should prepare for contagion. I'm afraid it's here. It's coming. And you don't do government cuts. There's no productive spending when you really grow government. It's never productive spending. Biden did that with Yellen, and they masked the recession. They said it's not a recession. Look at the employment market. What was happening? They were hiring DEI, all sorts of transgender consultants, etc., etc. You can create jobs. I mean, Milton Friedman, I will tell you this story. I think it was Milton Friedman. No, was it Milton Friedman? Could have been. He was in India. The Economist, I may have got the wrong Economist. It could have been Keynes or one of the others. But I think it was Friedman. They were digging with shovels and laying roads in India. And there were lots of labor workers all digging the roads. And Friedman said, why aren't you guys using earth-moving equipment to the roads? I mean, so much more efficient and more productive, bulldozer. And the guy turned around to him and he said, oh, sir, but it's the jobs. We need to do the jobs. And, we wouldn't be giving so many people so much work. So Friedman said then, okay, take away the spades and give them teaspoons. Then you could have even more jobs. So this is the inefficiency. You should strive for efficiency, not bad jobs. And government, in essence, there's a lot of bad jobs. But when you start cutting them, even though it may be the right thing, that's laying off a lot of people that will no longer be buying holidays, various goods. It's going to feed into the contraction. So even good cuts will lead to adverse economic knock-on effects. And that's something that nobody understands, or no one talks about. Many people understand, I think, but the contagion aspect is you go into free fall with that. And that's going to lead to more and more jobs being cut, less and less money being around. You actually get a black hole for money. We've had this ever expansionary solar system that's just, blown big. And now you get a black hole, it just will hoover up all the cash. Soon there'll be a shortage, literally, of people with money because the debt values fall close to zero. That means all the assets in the pensions have got lost or been destroyed. The banks will fail. That means a lot of the money won't be available to citizens. So you really need to have reserve assets. There's a very dark contagion that's coming, but it always creates opportunities, and night always brings a day, and eve always brings a morning. So this is not a doomer's pitch. Remember, apply the rules that were applied, keep applying the rules, find a way to be useful and valuable into all circumstances, position for crisis, I mean, people that do cash converter pawn shops have done better than people that were, trying to sell luxury items in working class areas. So positioning is important. And that's another thing I would say is so watch for the contagion and ensure you're well positioned. I don't think America is going to be a great place to be when the crash happens, but Europe will be as bad or worse, and the UK. In fact, all the English language speak nations are going to be in huge trouble, plus the EU, in my take. So in actual fact, the safest thing to do is to live somewhere else and watch this from far away. That doesn't mean China's perfect. It doesn't mean Russia's perfect, but they don't have the same debt. Well, China's very indebted, but they make things, they manufactured. Russia is not very indebted. I'm not saying move to Russia, but what I'm saying is being in the southern hemisphere, being away from wars, being in places that are self-sufficient, where there's good farming, good sunlight, you'll survive things like pandemics, food supply shortages, and everything else. And that's probably my answer.
Francis, really appreciate your time. I really enjoyed this episode. How can people learn more about you and get in touch?
Sure. We run a YouTube cycle. So our primary goal, I mean, call it the elevator pitch if you want, is literally to help people build wealth as briskly as is plausibly possible in a sensible manner. So we use very judicious leverage, often just investment. Build wealth. It's important now more than ever because it's your lifestyle for your mid years, your retirement years, everything. And the world is going to change. It's going to be unfriendlier from a financial point of view. People don't realize what a money swirling event the last 40 years, the 80s through to the 2020s have been, the 40-year bull market in the bonds. So we aim to do that. We aim to preserve that capital, because one of the repercussions is governments go into scavenge mode and will introduce things like unrealized capital gains. We've heard a few trial balloons on that. Other taxes, bigger death taxes, bigger road taxes, all sorts of things. So governments are going to go into scavenge mode because the politicians still want to be paid. They're not going to be able to steal as much of what they're sending over to Ukraine. And they're also going to battle to fulfill services. Stateside, municipalities, countries, everybody is in various states of bankruptcy in many, many areas. So preserve capital, build wealth, preserve capital. And what's the third one? Give you as much of your freedom back in what's moving towards a bit of a totalitarian world where governments get more aggressive the more they need money. And we want to preserve freedom. So freedom, capital preservation, and building wealth are important to you. We specialize in that for reset times, and you are living it right now. So this is our business, and that's our positioning. Think about yours. How are you set for when the ATMs go dark? We'd love to help you with that. Click on the Market Sniper YouTube channel. Enjoy our material. You'll see how we look at charts. We see what people are doing, not what they're saying, by utilizing technical analysis. You're welcome to also follow an X under the Market Sniper. We cover the crypto markets as well, although, as I say, we don't trust them, under the Crypto Sniper, and the X profile, the Crypto Sniper. And thank you for having me on. And remember, you were born for this era. It sounds formidable. It sounds scary. You were born because you can handle it. Seize it and cope. You weren't asked to have an easy life. You were asking to have an interesting life where you could express real skills. It's in tough times that real leaders emerge. We need everybody watching this to rise up and be a leader and be an advocate for sound money. And if that sounds well to you, you'll enjoy our community. Thanks for having me on.
Amen to that. Francis, thanks so much.
Absolute pleasure.